My next guest says the huge spike in natural gas, which has soared 120% this year, double the move of crude, makes shares of nat gas distributors and utilities an attractive opportunity. Joining me now is Ryan Kelly. He's the Chief Investment Officer at Hennessy Funds and Portfolio Manager of the Hennessy Gas Utility Fund. Ryan, it's great to have you. So explain to me why utilities are financially benefiting from these prices.
Sure. Well, thanks for having me. I appreciate it. I think one of the first things to remember, and Steve touched on this, is that the price of the commodity, the price of natural gas, the price of producing electricity is a pass-through to customers ultimately. And so these utilities, through the regulatory process, are, they're there to deliver energy to the customer. They take a fee, they're toll takers for moving that energy to the customer, but ultimately the cost itself is passed on to the customer. So, we think that on a year-to-year basis, it's really weather that mostly drives the spike in demand for these companies. This year, we've had a 17% warmer than normal year so far from electricity generation for a lot of the electric utilities. They've been producing a lot more electricity to keep our AC running, and we think that this spike in natural gas prices is going to hurt this winter, but this is a very resilient industry. And in the past, when we've had these types of movements, we've also seen production come back online as well.
Exactly, and that's what I want to talk about. So you have holdings both on the production side with names like Cheniere, obviously on the utility side, which, as you said, just kind of passing things along as well. With a name like Cheniere and with all of the demand that we're going to see for liquefied natural gas and all the rest of it, tell me how long you think prices are going to stay up here. I mean, what happens for people who might be looking at a Cheniere with prices around $6? Are we going to fast forward a few months and see prices back in the $4 range?
Sure. Well, one thing to remember, Cheniere is an LNG exporter. They ship LNG around the world. Right now in the U.S., natural gas prices are around $5 or $6 per million BTU. Well, over in Asia and also in Europe, they've hit close to 40 almost. So that is the spread that's really driving all of this, is that the rest of the world wants our natural gas. We are, besides Hurricane Ida taking things down for a little bit, we are absolutely at peak capacity right now, moving natural gas out of the country. This is all very good for Cheniere. It's just creating a whole lot of cash for the company right now. They've been waiting for a long time for this, and I think that it's probably going to go on for quite some time for them.
Because you think natural gas is complementary to renewables in the kind of lower carbon future that, again, next month COP26 is going to highlight. China is obviously trying to reduce its usage of coal and the rest of it. But even there, where the prices are much above U.S. levels, can they stay this high? I mean, look what happened yesterday when Russia said it would start to, put more supply back online.
Yeah, they'll probably come back down. And one of the things that we recognize here, that this is a short-term disruption in many ways for various reasons. But the rest of the world has, not the rest of the world, but many parts of Europe has absolutely gone to natural gas as the transition fuel from a pure fossil fuel type energy economy to someday a much more 70%, 80% or higher renewable type energy complex. And so right now, I think we're in a little bit of a bind where a lot of countries have moved too fast, too far, and everyone wants natural gas. China is worried about blackouts this winter. They want to keep production up. They need energy. They're going to keep buying no matter what the price, I think, for quite some time until they can really fill up some of their energy reserves.